the cash flow effects of the increases in tax. In this video, I want to look at how to manage the cash flow impact of the increases that we're going to have in taxation, so that we're not shocked by sudden increases that we can't pay. I do regular updates on tax and accounting issues, so if you want to be kept up to date, please subscribe to the channel, and if you press the like button, it helps me and the channel. So why am I concerned about the cash flow implications of the tax increases? Well, some tax increases, it doesn't really matter, because some of them are just payroll taxes, and PAYE, payroll taxes, we pay a month in arrears, so we pay straight away. So those tax increases, the cash flow isn't to worry about, we pay it straight away. But the corporation tax, we pay corporation tax way in arrears. So we pay it 9 months after the accounting period, which is 21 months after the accounting period starts, 9 months after it finishes. So there's a very considerable time lag between when we earn the money and when we pay the tax. Now let's just remind ourselves that the tax for anything but small companies is going up from 19% all the way up to 25%. Well, that's only 6%. Well, yeah, it is only 6%, but it's 30% increase in the tax you pay, and that's the important figure. So if tax is going up by 30%, we just need to be careful. The other thing that I am concerned about is that I think it's really difficult to see how the economy is playing out. The whole thing got out of kilter during the last few years, and we had, initially huge reductions in economic activity. Then we had a huge increase, and then we all know, anybody who employs anybody knows that it's really difficult to recruit at the moment. Prices are going up really quickly. The government's beginning to increase interest rates, or the Bank of England is increasing interest rates, and the whole thing, I think, is very difficult to predict into the future. Now, my concern with that is that I know a little secret inside companies. I know that for most people, we pay last year's tax with this year's profits. We're all sort of a year behind. Now, some people, very disciplined, they keep, as they earn the money, they keep that money in the bank account, and then they have it all ready for when the taxes are due, and that is what I recommend. But back in the real world, I know that most people, in fact, don't do it like that. They save up for the tax bill out of this year's profits. Now, there is a trap. So the trap is that if there is a recession, if the increase in interest rates, or if it all goes out of kilter and they don't get it right and there's a recession, then it might be more difficult to earn profits. But if you've got reduced profits and then bang, a 30% increase in the tax bill, because you're paying the tax on last year's profits and you're trying to pay the tax out of this year's profits. You earned it last year, but now it's more difficult to earn those profits. You can have a huge double whammy of increased taxation and at the same time reduced profits, and that is what I'm worried about, and that is what I wanted to highlight in this video. So what do you do about it? Well, tax still is at the lower rates. The new rates of corporation tax don't kick in until April 2023, so we've got a little bit of time to prepare. And what I suggest is that we just try to ease it all back and get more ahead of ourselves, so that we're paying this year's taxes out of this year's taxes we're paying from this year's profits. So we just save a bit more than normal, so that we can get ahead of ourselves and get it so that we've got that money saved for the tax bills. And I think it's much better to do that now. And for a lot of businesses that are still making good profits, although I know that that's not, before I get shouted at, that's not for everybody. I know some people are struggling, but a lot probably the majority are not. The majority are probably okay. So my suggestion is that just be cautious about and have some money in reserves so that you can pay your tax bills even as they go up by 30%. So that's my thought for this video. I hope you found that thought useful. If you would like to subscribe to the channel, you'll be very welcome, and please press the like button if this has helped you manage your money. Thank you.